What if I told you that wealth doesn't just come from working harder, but from making smarter financial decisions? That the right investment could change your future forever? Today, we'll uncover the truth about two of the most powerful investment options: real estate and stocks. This isn't just a theoretical discussion. By the end of this session, you'll walk away with clear answers to whether you should invest in real estate or stocks, and how to start making smarter financial choices today. Stick with me until the end, and you might just find the key to building long-term wealth that fits your goals. Let's start with real estate. Real estate investing is often seen as one of the most stable and tangible forms of wealth building. But let's break it down into key ideas. Real estate, tangible wealth in your hands. When you invest in real estate, you're putting your money into something you can physically touch, see, and manage. It's a tangible asset, which appeals to many people because it provides a sense of security. Think about it. You're owning a house, an office building, or even land. In essence, the property can offer you two potential benefits: appreciation and rental income. For example, let's take a look at the housing market in cities like Austin, Texas, or Phoenix, Arizona, which have seen rapid appreciation in property values over the last few years. Homes that were once priced at $300,000 in 2018 are now worth upwards of $450,000, reflecting the market growth driven by population booms and increasing demand. Additionally, real estate can offer passive income through rental properties. For instance, a two-bedroom apartment in a city like Tampa, Florida, can rent for $1,800 per month. Over the course of a year, that's $21,600 in rental income, not including the tax benefits of property ownership, depreciation, and possible equity growth. However, here's the catch. Real estate requires a much more hands-on approach than other forms of investment. You're responsible for property taxes, maintenance, possibly hiring a property manager, and dealing with tenants. These are the costs of owning property, and they're not always immediately obvious. But despite these expenses, many investors still see this as a long-term benefit because, over time, real estate tends to increase in value, even though short-term fluctuations do occur. The stability of real estate is one of its greatest selling points. Example: the pandemic showed us how unpredictable markets can be, but real estate in suburban areas remained relatively stable or even saw growth. People began flocking to areas outside crowded urban spaces, looking for more affordable housing options, driving up property prices in places like Boise, Idaho, or parts of North Carolina. This shift illustrates the long-term potential of real estate to adapt to market conditions. Real estate versus market volatility. Unlike the stock market, where prices can swing dramatically, real estate typically shows less volatility. For instance, in 2008, we saw a massive financial crisis, and real estate prices in many parts of the U.S. dropped sharply. But recovery came, and many properties have since gained value, making it clear that, though risky in the short term, real estate tends to recover well over time. Quick recap: real estate offers stability, physical ownership, and opportunities for passive income, but it requires time, money, and hands-on management. Now let's talk about stocks. Stocks, the power of ownership in high-growth companies. Investing in stocks means you're buying shares in companies that may or may not pay dividends, but always come with the potential for huge growth. When you buy a stock, you're essentially a partial owner of that company. As the company grows, the value of its shares increases, and you make money through capital gains, profit from selling your shares for more than you bought them, or dividends, a portion of the company's earnings paid out to shareholders. Take Apple for example. If you had invested $1,000 in Apple stock in 2011, that investment would be worth over $15,000 today, thanks to their innovation in tech, expansion into new products, and consistent growth. This is the kind of high-growth potential stocks provide. Unlike real estate, stocks are much more liquid. You can buy and sell stocks easily, within minutes. In fact, through platforms like Robinhood, E-Trade, or Charles Schwab. This is one of the major reasons stocks appeal to investors who want to quickly cash out or reallocate funds. For example, during the pandemic in 2020, we saw the rise of retail investors taking advantage of stock market dips to buy shares of companies like Tesla, Amazon, and Zoom. Tesla stock, in particular, skyrocketed from under $500 in early 2020 to over $2,000 by the end of the year, largely driven by investor enthusiasm and strong growth in electric vehicle sales. However, stock investments come with risks. The stock market can be volatile, especially in the short term. A company can perform well for years, but then experience sudden declines due to shifts in market conditions, bad management decisions, or economic downturns. Example, take the case of Meta Platforms, formerly Facebook. While it once commanded a massive share price, its stock plunged by over 60% in 2022 following poor earnings reports, challenges with competition, and a shift in consumer behavior. Stock prices are not guaranteed to go up. They are influenced by a variety of factors, including market sentiment, the broader economy, and company performance. How do you choose between real estate and stocks? So how do you choose the right investment? Let's break it down with some practical questions to ask yourself. First, what is your risk tolerance? If you're someone who likes stability and is okay with a slower but steady accumulation of wealth, real estate could be your choice. On the other hand, if you're comfortable with more risk and potential volatility for higher returns, stocks might be more suited to your goals. Second, consider your financial goals. Do you want regular income, or are you looking to grow wealth over time? Real estate offers that regular income through rents, while stocks are more about growth through capital appreciation and dividends. Third, how involved do you want to be? If you want a hands-off investment with less direct involvement, stocks are your best bet. Real estate, especially if you're managing properties, can take up a lot of time. Quick example, take someone like Warren Buffett, who has made billions investing in stocks. He's known for picking companies with strong growth potential and holding on to them for decades. He's seen massive returns from his stock portfolio, especially from his investments in companies like Coca-Cola and American Express. However, real estate moguls like Robert Kiyosaki, author of Rich Dad, Poor Dad, swear by real estate as the key to building long-term wealth through cash flow and equity growth. What are some actionable tips you can use? First, start small. If you're new to either investment type, consider investing in real estate investment trusts, REITs, which allow you to invest in real estate properties without the headache of managing them yourself. For stocks, consider using an index fund like those offered by Vanguard or Fidelity to invest in a broad range of companies, rather than putting all your money into a single stock. Second, diversify. Whether you're investing in real estate or stocks, don't put all your money in one place. Consider a mix of both to balance risk. For example, owning a rental property in a growing market and a diversified stock portfolio can protect you during market downturns. Third, always do your homework. Research the market trends in both real estate and stocks. Use tools like Zillow or Realtor.com for real estate market insights, and websites like Yahoo Finance or Seeking Alpha to track stocks and stay informed on market conditions. Conclusion. In summary, both real estate and stocks offer unique opportunities to build wealth. The key is to understand your personal financial situation, your goals, and your risk tolerance. Whether you choose to invest in the stability of real estate or the high growth potential of stocks, it's important to be patient and informed. Real estate offers tangible, stable returns with the possibility of passive income. Stocks offer liquidity, high growth potential, and diversification with a greater level of risk. The best strategy often involves a combination of both: real estate for stability and income, and stocks for growth and liquidity. Remember, your journey to financial freedom starts with one smart decision today. Start small, stay consistent, and watch your wealth grow. Thank you for joining me today. The future is in your hands.